Hey, everybody. Thank you so much for being with us here this evening. You're tuned into TrendSpider TV. My name is Jason Krutsky. I'm going to be your host. And joining us this evening, a man you all know very, very well, the illustrious Mr. Jake Wujastic. Jake, how are you doing tonight, buddy? It's so good to see you.
Hey, thank you for having me on, and awesome to see you as the new host of the TrendSpider live streams and all the Twitter spaces. So I'm really excited to see you really prosper in that role, and everything's great. Maybe the charts aren't, but everything else is good on my end, and we're gonna maybe look at some charts that everybody's not exactly happy about seeing, but that's kind of the lay of the land at this point.
Yeah, that's how it goes, isn't it? So let's talk a little bit real quick before we get started how the voting process is going to work. You're going to be able to vote 3 times per round. One chart is one round. So after we go through a chart, you're going to be able to vote again. You can vote for 3 unique names per round. You cannot vote for the same name 3 times, but you can vote for the same 3 names every round if you'd like. So if there are charts that you really want us to get to, make sure you vote for them each round. We're going to jump right in here. We're going to start with the SPY chart. Jake, let's talk about the SPY. Where are we at? What do you see?
Yeah, so I have been posting this symmetrical triangle here on the daily chart for probably since yesterday, and maybe even before that. I may have posted 3 days ago, but anyways, this has been the setup to watch, right? So like this is a very neutral setup. It's not like, oh, this is bearish, this is bullish. Price dictates where we go from here. And at the end of the day, you can see here, I'll highlight it with this circle. We did start to break down through the symmetrical triangle support. So that is definitely not what I would call the most bullish case. You do have essentially these zones becoming if thens, right? So if the price breaks down through the support zone, which it did today, then you can probably start targeting new levels below. So the first one would simply be this previous low here on February 14th, which is right on, let's say, 435.50. The next one is down here around 428. So if we really do start to accelerate into the short week next week, and people start selling into the holiday weekend, we could have a pretty ugly day. Now, the problem is this whole market is driven by news. What if we wake up in the morning and the U.S. and Russia all of a sudden and NATO start talking about, they're going to host talks next week about de-escalating this situation? It is so news driven. It's very similar to the China tariff news that was coming out almost every other day a few years ago. It was really hard to swing trade any type of move because there was just so much gyration in price from these headlines. So, this is definitely a day traders market 100%. You're in during the day, you're all cash at the end of the day. And some people can do that, some people can't, but that is just the market that we're in. And if I were to take a wild guess, I couldn't even tell you. The news is so the news is just so holds so much value overnight. You really couldn't even take a wild guess. I mean, you could, but it's just not dictated by anything but headlines coming out.
Right on, right on. I know you like to kind of take a look at multiple different time frames. Was there anything that you're seeing on any of the other time frames, or I want to keep on moving on to the next one?
Yeah, so as far as SPY goes, we're looking at the daily chart. We broke down here. This is definitely something to keep an eye on. On the weekly side of things, you can see here that this longer term previous support zone has definitely been an area where price has respected. So anywhere, if you're watching this red circle, let's make this a little smaller. You initially started here. You can see a bounce here, bounce here, bounce here. We're getting to this area again for pretty much the 5th time. And we'll have to see if this holds again. I mean, we did actually undercut it here back in late January, and we bounced very quickly back to the upside. But, this could easily bear flag. There's a lot of bear flags out there. If we were looking at the votes and what charts people want to see, if it has anything to do with growth or anything to do with tech, it's likely breaking down through a bear flag. I mean, most charts are looking the same at this point, and this is the same, right? If I just decided to try to draw a simple flag, you can see that we are definitely at a point where we were consolidating to the upside. We're starting to break down. Not necessarily the strongest price action here as of now. And as I mentioned, that can change really quickly. But for now, we have to take what we have, and that's not incredibly strong weekly candle. And then on the monthly side of things, you can see here that we have definitely started to break down through some of these previous support zones that we saw in November 2020, back in October 2021, again in December 21, and then we broke down through it. We've got this wick, which is the previous low around 420. And generally, when you see this type of setup here, you will at least retest this wick. So if that's the case, we have quite a ways to go to the downside, simply following those price action rules with candles. But that is the daily, the weekly, and the monthly. As a swing trader and somebody that's looking at more of the short term versus the medium and long term, I am using the daily, the weekly, and the monthly. For those that are day trading or scalping, you're probably going to be using the 15 or the 65 minute or maybe the 30-minute candle. And so you may definitely see some different patterns based on that.
Right on, man. Well, let's get on moving on to the next one. Looks like we've got Facebook next on the docket. What do you see there? Yeah, looking pretty bad.
Yeah, not great. So this is one that is honestly looking really rough, and honestly, it's kind of one of those names that I'm shocked that it took this long to have a move like this. I mean, this is one of the bigger moves down we've had since the IPO. So if you look at the IPO high to the IPO low, we dropped about 61%. So that's definitely the biggest move that we've had. But we've also had previous moves in 2018 that were like 43%. You can see here the COVID drop was about 38%. But at this point, we're down literally 46%. So this is a huge move. And not only that, but on the monthly side of things, you can see we're breaking down through this longer term support zone. So we are breaking a pretty long-term trend that goes back all the way to 2012. And if you were to try to get an idea of where price action may catch some type of bid, or at least have some type of selling pressure fall off, this is where I'd use the VWAP handoff approach. So what I'm doing is I'm starting a volume weighted average price from this 2012 low, and then I'm connecting that to the last candle that tested the original VWAP. So you've got your original VWAP in September 2020, September 2012. The next candle here is the last time the original volume weighted average price, this blue line, was tested. So that's your handoff point. So you start another VWAP here, and then that VWAP moves up. This candle here on November of 2013 was the last time this VWAP was touched. So you create another VWAP there. And then you can just continue to do this. The last candle that touches the next VWAP, you just create another one. And you can see here, as we kind of create these areas, the next main zone I would be watching here on Facebook would be honestly around like 187. And give or take, we do highlight this last VWAP here. You can see there's been multiple times where the price has respected it, but not perfectly. Give or take, $10, and that was at 140 and 130. 140 was the VWAP, 130 was the low that we hit. That's a solid 4% or so. So or no, sorry, yeah, around a little more than that. But all in all, I mean, you have margin of error around this area. So if your VWAP is at 140 and you're testing this is way down actually at 122. There's a lot of margin of error around here. Same thing here. We tested March 2020 was the VWAP at 147. We hit all the way at 136. So if we move down here, who knows? We could even hit the 175 area below, given the previous times price hasn't respected this perfectly. So probably the ugliest monthly candle you have here, on really any chart we're going to look at. Weekly looks horrible as well. You pretty much have the same chart, just in a more granular type of candlestick pattern with the weekly here. Breakdown as well. You can see that this area highlighted in the green circles was previous support. Now it's breaking down. And it's crazy because if you look at it since 2012, this thing technically has a lot more room to move down, especially if things really start to get ugly. So Facebook may be leading the pack here. And then if you look at the daily chart, this thing just keeps hitting new lows. This closed essentially at the low of the day, give or take maybe a few cents. But yeah, Facebook does have a gap as well. If you turn on the gap snake here, you'll need to change the gap snake gap factor here to probably like 0.1. You'll see there's a gap right here. So if I'm just going to use the rectangle feature and just like that here, you'll see that's down right first is 196, which is just this gap below. And then if that breaks, you do have another gap below. Let's say that's around 177 or so. And so there's a lot of Swiss cheese charts out there, meaning there's a lot of holes in the charts. There's a lot of gaps below. And we saw this back when COVID happened. You just kept filling the gaps below, and that could be what's up in the next couple weeks.
So what you're saying is if you're thinking about buying the dip on Facebook, you might want to wait for a little bit more confirmation before you start pulling the trigger on some trades like that.
Yeah, people can do whatever they want, but for me personally, it would be really hard to be buying the dip when you've got gaps below that are generally areas of essentially kind of acting as a magnet for price. That's where your liquidity areas are, that pretty much essentially air pockets in price.
Right.
So yeah, there's no time frame that looks good here. If you're shorting, and that's the thing, right? Like all these charts look horrible, but if you're simply following trend, this has been in a downtrend for a hot minute. You've got lower lows and lower highs now for the last essentially 8 months or so. Give her, let's say 5.5 months or so. Starting pretty much from this point here, which was September. So from this period, we have been hitting these lower highs and lower lows, a chart that you just continue to short. Is it Jason?
We're here with you, brother.
Oh, he's here. But yeah, no, Facebook is
not looking good.
It would be hard to buy the dip, I think. But to each their own.
Right. All right. Well, let's keep on moving here. Gonna hit this next round button. We're gonna see what's up next. Looks like we got AFIB, Atticus Medical. AFIB.
AFIB. Oh man, never heard of this in my life.
Ooh.
And does not look too hot. Yeah. Ouch. We can't even turn on the gap snake because we're hitting new lows. There is no price action below this. This is if you were, and this is the thing, if you turn this chart upside down, you would be buying the heck out of it. Why? Because you're essentially hitting new lows. If you turned it upside down, you'd be hitting new highs. And generally people are buying that. So if you simply just looked at like a flag type formation, we've got this kind of consolidation zone here that's happened over the last, let's say, 3 or 4 weeks, pretty much since January 24th, so 3 weeks or so. And the fact that we're starting to break down, that's that can't be incredibly bullish here. So the thing is, at this point, you don't really have and now that I'm seeing this, I'm just looking at the chart. I didn't even look at the price action. It's 1.9 cents. It would be really hard for me to imagine this being any type of solid stock, not only on the chart, but the fact that it's 1.9 cents. So if it's a medical type of company, anything in the biotech, pharma, whatever, they love to dilute their shares. So even if there was a pop, I would definitely be shocked if they didn't do something like that. So all in all, pretty brutal chart for the longs, beautiful chart for those that are shorting this stock. But I don't know if I would short a $1.90 stock, but that's just me. And you can't even really go in the longer time frames here. It's only been around since August of 2020. There's not much of a weekly or monthly setup to look at other than just straight down.
Pretty ugly. Pretty ugly. Moving on. Let's hit the next one. Next round. Here we go. Let's see. Roku, ROKU. We all know this name.
Another one that is brutal. Absolutely brutal. I really had some faith in this thing until it just absolutely could not hold on to any type of move it had to the upside. I think the main thing that you want to focus on here is one, the December 2018 low has just been broken down through since about the early start of 2022, and we've pretty much retesting this and more. So we're on the monthly chart. We can't really take into account that after hours price action unless we're on the daily chart. And if you look at that, holy shit, this is at 112. Oh my God. Oh man, you hate to see it. Yeah, but at the same time, it's not really shocking. You had this support trend line here that was your main area to watch, and it reminds me just of like Shopify and even PLTR. They all were in these just absolutely brutal bear flags, bear pennants, and you just had a continuation down. I did not realize Roku was down 30%, so excuse my French there for a second, but wow. Yeah, last time I saw it was like 121 after hours. So
what do we see? What do we see on bigger time frames? Where might this thing finally find some support?
Yeah, so we can't look at the after hours price action on the weekly time frame, but I mean, if you're looking at this, even that essentially is just absolutely gotten destroyed down below. So your next level is simply just this previous low here, the COVID low around $60. That would be like an all-time like target below. But before that, you've got this pivot down here around 102. So 102 is your low from May of 2020, and that's right around 98. What are we after hours? 112. So 98 isn't too far away at this point. Absolutely brutally ugly chart. Yeah, this one turned pretty quick. But the thing is, as we were talking about, all of these charts, these growth names have the same chart: Shopify, PLTR, Roku. What was another one? All of these other names. Look at the daily chart here. There's just a massive bear flag, and if this follows anything like your Roku's or your PLTRs or anything like that, this thing's about to get absolutely destroyed. But even though price action is simply a function of what the state of the market is in, you can have some random news article that comes out tomorrow when Putin and Biden all of a sudden are ready to sing Kumbaya, and that could rip the markets 2%. So you just have to be very nimble here in this market. But NVIDIA is a setup here that has pretty much destroyed over the last 3 or 4 days.
Yes, sir. All right. We're going to keep on moving here. Go on to the next round. Looks like we got Microsoft.
Oh, even worse. Yeah, this is another one that is just starting. And this is one that you want to throw on the line chart here. I mean, if you look at the line chart on Microsoft, you don't get a lot of the noise that candles give you, but you get a better idea of what's going on. I mean, you've got literally probably, like, if you had a textbook, this is what a head and shoulders pattern would be highlighted as. Yeah, it's almost perfect. You got this area here. If I were to guess where Microsoft is probably going to the low 280s. And at that point, you'd have almost a perfect head and shoulders. And that point, that's going to make or break zone. If you really break down through there, your next level below would be this previous high, which is right around 263. And you could also create a VWAP from this low here from May 2021, but you already broke down through that. So I'd go to your next pivot here. That would be around 287. So pretty much if you just start creating VWAPs from these pivots, you'll see, look at this one from January of 2021. It lines up almost perfectly with this September 2021 low. So if I had to take a wild guess, I could see Microsoft at least 285 to 280 in the next few days.
Man,
if we want to let's look at the weekly just to, keep it. Well, I mean, the weekly is even worse, right? Like, look at that. I mean, it's really hard to be bullish on that type of setup at this point. There's a million different ways this could go, but if I were to want to see where this would possibly go, maybe something like that. But when you've got rising interest rates and you've got some of these names that just have absolutely crazy PEs and just things like that, sometimes these bubbles have to pop. I mean, look at how perfect that parabola is of this pretty much exponential move to the upside. These can move down pretty quickly. So, is this another kind of, I mean, if you look at the COVID move, you had 23% move. Look at Microsoft at this point from the high to low, we're down 13%. So if we mimicked the COVID move, we have quite a ways to go. And even if you consider the COVID move, that's a huge move in price. That's a huge reset in the economy. But maybe we're not there based on the economy being that weak and we've got just a crazy pandemic, but we've got rising interest rates that can really mess with things. The thing is, though, if you look at the dividends, this thing does have a dividend. So, that's something that is interesting, because notice what's happening here. We're getting very close to the dividend getting paid out. So people usually buy into a stock because they're about to pay out a dividend. If you sell this thing after you get paid in the dividend, that could also be another reason for this thing to sell off, simply because people just bought it to get, a percent of what they're holding. And so these vertical lines here represent every time there's been a dividend. Notice every time, or a lot of the time, you have a dividend payout, you get a sell-off. So this is one of the few times in May of 2021 you didn't. Here, sell-off, here, sell-off. We're pretty much at that point here. You got here, sell-off. Yeah. So here, sell-off. So what happens is, people start selling because they got their dividend payout and they're getting out. So that's another thing to consider. And that's something you can use on TrendSpider, other data. There's a lot of different things you can visualize. You've got analyst estimates, splits, dividends, earnings. The two things I use the most are earnings. The worst thing you can do, and this is something that Jason and I were talking about earlier, I was looking at Home Depot as a potential trade, and you literally would be looking at this setup, and if you didn't have the earnings date on, you would have no idea that earnings are in the next, what was it, today? Or in the next 2 days.
2 days.
So this definitely helps. This is something that is absolutely a nightmare. There's nothing like buying a stock and then realizing earnings are in the afternoon, and you're pretty much going into the afternoon thinking that you're in a trade, which could easily become an investment, especially if you've got a Roku type move. So, definitely use that other data, especially during earnings season. If you're trading, if you find something on a scanner and you find a great setup, turn on the earnings data to know when that earnings is. If you're buying a setup into earnings is such a binary event, that setup could completely get destroyed. And you just want to make sure that you're not buying into a very big event like that.
Right on. Yeah. And, speaking of the platform, while we're talking about it, we hit 200,000 followers on Twitter. So thank you so much to everybody who's a follower on Twitter. Because of that, we are offering 50% off all of our subscription levels right now. 24 hours, there's about 12 hours left. So if you're watching tonight and you are on the fence about whether or not you wanted to get an account with us, now is the perfect time. With that, we are going to jump to the next round, Jake. It looks like we got the Qs. What's going on with the Qs, Jake?
The Qs. Pretty much same thing as the rest of the market. Now, this is a diagram. This is a graphic that I created, and it was so funny. So many people got so angry about this thing. It was simply an observation, kind of like me saying, "Hey, the sky is blue," right? This is a very similar pattern, and that's really all I was highlighting here. Was you got a very similar move, pretty much compared to February 2021, when you compare pretty much December into January of 2022. You've got pretty much three areas here. You've got the initial drop, which is your top to the bottom, 1 to 2. 3 is your corrective move up. 4 is your lower high. And you can see that's exactly what we have here. And we still actually have a lower high here, or excuse me, a higher low, like we had back in March of 2021. So until we really break this previous low of around 341, this pattern is still valid in my opinion. And it's not going to be perfect. There's no pattern that happens exactly the same as one that happens another year later. It's simply just an observation that this pattern has occurred in the past, and we'll have to keep an eye on how it looks in the coming days. Price action dictate that, nothing else. Now, if you look at the weekly chart, you can see here that we do have essentially this trend zone here that is being retested again. And if you essentially start a VWAP from the start of this trend zone, you'll see that this VWAP is pretty much right in line with this trend zone, a little below it. So around 335 all the way to 337, 338. So if I had to take a wild guess where we move to the downside, if we continue to move down, which looks more likely than not, there's no guarantee in any move. But if we were to take a probability, this is a pretty ugly setup. We could retest these previous lows that we saw around 334 to 337. And on the monthly chart, you definitely do not have the strongest move here. You can see that this monthly candle looks very similar. Oops, I just moved this screen a little bit. If anytime you have a monthly candle like this, if you have a wick all the way down here and you've got the price action midway through this wick, you're probably going to at least retest the bottom here of this wick. In that case, that would be these previous lows, as I mentioned, around 334, 337 zone.
Right on. So essentially, every single one of these charts looks like it's bad. Every single last one of them looks like they're all going lower. Let's see if we can't find one. Let's get some upvotes for one that's looking good and looking bullish for the bulls. Next round here, let's see what we got going. We got Ford.
Yeah. This thing was like everyone's dream a couple weeks ago, and all of a sudden now you're from a high of 26 and now you're at pretty much 1750. Another one that does not have a great monthly setup. If you look at the weekly setup here, you can see here that maybe you've got a little consolidation. You do have, and this is going to be an interesting thing to keep an eye on. As oil moves up, that actually may help these electric vehicle type of plays, right? So like imagine if you're looking at your costs and you're looking at your budget, oil gets to a point where it becomes so expensive to fund, essentially having a car. An electric vehicle actually may make more economical sense. And that's honestly why I think oil prices are going up. I think they're definitely being manipulated to the upside, essentially to drive that new electric vehicle craze, which I support. I mean, I think it's good to have a new type of economic sector that creates new jobs, all that type of thing. But it will be interesting if EV does find a bottom here. that may mean that oil could even continue up, because as oil goes higher, EVs are going to have a better chance of essentially becoming a thing, because oil gets to the point where it doesn't make sense. It makes just as much sense to have an EV than it does to have a gas car, a car that essentially uses gas for fuel. So that's something to definitely consider. Same thing with solar. So Ford is obviously at this point considered an EV play. They're getting into the electric vehicle market, i.e. EV. And you've got these higher lows still. You got higher highs, higher lows. Is still in an uptrend. And if I were to simply just draw like a support zone here, you can see here that we're literally holding on right at this area. So this is pretty much where you need to hold. If not, we could definitely start taking a move down. And if you were simply just looking at price action, this would be in the area below its previous high, around $16 or so.
Interesting. Yeah, I never really thought about the idea of gas prices being jacked up for the sake of the EV world. So that's kind of an interesting mindset that I would have never even considered. That's interesting. Let's keep on moving. Next round.
All
Top
right.
votes, AMD, sir.
AMD. All right. AMD. Yeah, I can't say this looks good at all. And this is textbook as well. I mean, if we really zoom out, you're not going to be able to see it that well, but essentially you've got this long-term support zone that goes all the way back to 2016. You've got multiple times where the price action has tested this trend zone, either at the top or, going in a little more into this area. But essentially a trend zone is where I'm connecting a previous wick to another extreme wick, and then I'm actually creating a little more of a zone here to capture some of this price action that didn't touch the exact more solid line, but it essentially tested an area within X amount of the price. So here you can see 1, 2, 3, 4, 5, 6, 7, and then we finally broke through it on 8. Not only did we break through it, and let me move this arrow around so you guys can see this again. Not only did we break down through it, we retested this previous support zone, and now we're getting rejected, which is a pretty classic setup here for a bigger downside move. If that's the case, this thing could at least retest the lows here around 100. And honestly, I would be shocked if we didn't even retest these previous highs here, which would now act as a level of potential support right around 90, 95, 96.
What about on the shorter term timeframes?
Yeah, I mean, same thing. You definitely do not have any type of strong setup here. One thing I would mention is you do have these higher lows, but the same thing, right? If you draw a simple support zone here, you connect this this area of resistance here. You're pretty much in this same exact pattern as everything else. So if this breaks down, like a lot of things look like they're going to break down, you could definitely move down pretty quick. Now, at the same time, this is where the news comes in. What if we wake up to the U.S. and Russia are all of a sudden in, kumbaya, smoking the peace pipe and all that tomorrow morning? Then we could have a big move to the upside. It just is completely a function of the news, but this is kind of your make or break zone that we're at right now.
Yes, sir. All right, on to the next one. We've got BLD, Top Build Corp. Never heard of this company.
Neither have I. Okay. Looks the same as everything else. If I'm just gonna, so the flag feature here is something that I created and saved as a tool. So if you guys do want to create flags, if you want to create these trend zones that I've created, all you need to do is go to the channel tool. So that's this tool here where you have these 3 lines, and you'll see here I have this here. If I wanted to change this, all I need to do is change different colors. So like if I wanted both of these lines black, I would change the parallel and the main line to black. But if you want to have, let's say, a resistance or a support zone, you essentially change the main line to green or the parallel line to red or green, whatever the case is. I like to make one of my lines a little thinner. So you can see here, if I just move this up, connect this. I can move this to here, connect this to here, and obviously move this down a little bit. All of a sudden, I've got this trend zone. So that's something that you guys can save. All you need to do is go to this area. It's not going to look exactly like this if you do it, because I've already created these as green lines. But just double click, change these to whatever color, whatever stroke, the thickness of the line you want. Go to custom annotations, save as custom annotation, make it support zone, save, click done, and it pops up here in your menu here. So it's something that makes things a lot easier. So I did want to mention that because I do get a ton of questions about how to create those areas. But in this case, we're just using the flag. That was another one I created. And we have a bear flag here as well. I mean, this is on the daily chart, but if you look at the weekly chart, you know, same thing, it's just in a longer term time frame, but you still have this flag here. And you can see here, notice support just popped up. This is the new annotation that I just made. If I want to get rid of it, remove this custom annotation, click yes, and it's gone. But yeah, for now we've got, I mean, this is a very classic bear flag. If you invert this chart, it would look exactly like a bull flag. Generally, you know, people who are bullish would buy that to the upside, flip it around, and you would essentially be bearish on that to the downside. So yeah, BLD not looking great. Look at the daily chart. You know, same thing. You've just got a very ugly setup here for any type of long setup.
Almost a bit of a head and shoulders kind of thing going on too.
Yeah, you could definitely say that. Here's your, you know, shoulder one, head, shoulder. You could definitely look at that in a very similar sense. I would agree there. And you can almost have like 3 heads here, right? You got like these 3 different these points at the top. It's almost like a Homer Simpson head. But yeah, no, 100%. I think that's a great observation.
All right, we are gonna keep moving. You're gonna love this next one. It's PayPal. Ooh. PYPL.
All right, PYPL going to 0. Just kidding. We'll probably stop somewhere around 80 something. Yeah, this thing's brutal. I mean, I actually thought this may have a chance. And that was a couple days ago. You could see here that we had this slight, I'll point it out. You had this slight setup where you have this, you know, higher low, higher close. And I was just looking.
Seems like we might be having some technical difficulties, Jake.
Direction, know where you get invalidated here. The invalidation zone was simply this low. Even the bounce setup is over. So as soon as this broke around 112.45, that was your signal to get out. And now we're at 105. I mean, in 2 days, this thing is just absolutely brutal. And I remember someone telling me that they, you know, they had some hedge fund and they were some big shot and, you know, whatever. And, you know, they loaded up at 215. And of course I got blocked because they didn't like what I had to say about PayPal at 215. But, you know, I did think we'd get a bounce in the 180s, 190s. It really looked decent, but you know, the market had other plans, and your invalidation was simply these lows around 178. As soon as that 178 area here broke, and that was actually seen on the weekly candle, you know, that was your time to get out. You had a very, very clear bear flag here. As soon as you broke that flag, it was no time to be long, and that's exactly what happened here. So yeah, I mean, look at this. You look at the long-term support zone, you're breaking down just absolutely straight down. There's been no relief at all for this one. It reminds me a lot of SE actually. If you draw a support zone on SE, it looks very similar.
So what do you
think?
That
happened previous to this breakdown.
Where do you think this thing's headed? At least to those January 20 lows?
I mean, if we go on the daily chart, there's a gap below, turn on the gap snake here, and there's a gap below around 94. So I have no no reason to believe that this thing doesn't get to 94 at least.
It's a tough time out there in the markets.
It is. Yeah, if you're long, you're not loving this. But I mean, all of these charts are just trending down. So if you play the short side, you're loving it.
Right.
Too bad I'm just not really someone who plays the short side. So, and the thing is, I'm not really able to day trade. And with this new
Jake, I'm sorry, buddy. It looks like you've dropped out again, my friend.
it's really hard to trade when you're in the middle of a call. So it's really hard to do any type of day trading. You don't want to enter a position 5 minutes before you jump on a call. If you are someone we're on calls all day, I completely can empathize with you that this is definitely not the market that you can just easily get in and get out if you have things to do, quickly. But the thing is, you can use the alert system. That's something a lot of people use. If let's say that you're just away from your computer, maybe you're just, at the grocery store, you get the alert, you get it on your phone, you get on your email, and you can actually make a trade based on whatever level that's hit. But for me, it's just a little harder when you're on a call and I find myself earlier in this year looking at price action while I'm trying to do a presentation on TrendSpire. I'm like, this is pretty hard to do two things at once. But yeah, if you're short and you are day trading, especially, this is an epic market for you.
For sure, man. And I'm in complete agreement with you on those alerts. I use them like crazy. I cannot live without the alert system. That thing has saved me so many times. I can't even tell you. All right, let's keep on moving here. Next round, we've got Unity Software.
Ooh, another Cathie Wood name that, what is that now? 102? Actually, I thought it'd be lower than that. I mean, here you got the same setup that we've literally been drawing all night, right? You've got essentially this bearish pennant. You've got this support zone. You've got this resistance zone here. This one may be a little less defined as some of the other ones that we've looked at, but the same thing. I mean, you've got just this is a very classic bearish setup. Until the market really turns, the path of least resistance is down, it seems. And if we have a really rough Friday, this one could get hit pretty hard. I mean, a lot of Cathie Wood stocks got absolutely wrecked today.
Where should we be looking for downside targets?
I would just say the previous lows here. I mean, if you anchor a VWAP from this low, you can see that we already broke down through that. That was around 106. So if you're just looking at basic price action and horizontal levels, your next level below, let's give this area something to look at. You've got 1, 2, 3, 4, 5 different candles touching this line. Let's say 94, 95.
Got it. All right, we're going to start moving a little bit faster here. We got about 15 minutes left. Let's go to the next round. We got PLTR.
PLTR?
PLTR.
Brutal. Yeah, this thing, it's absolutely wrecked. You had, this is with pre-market and after hours data. If I turn that off, you'll obviously see a gap here. But I mean, look at this. I mean, this thing looks like it's ready for sub $10. You've got this bearish pennant that broke down. You pretty much have a close at the low of the day. I mean, this thing could literally go all the way to $9 at this point. Not tomorrow. Who knows? Maybe it could. But if I were to take a wild guess, I would look at something maybe like this, where you get a little bit of price action and move down. It wouldn't be exactly a straight move down, but the path of least resistance again for this one is below, which is around $9.
All right, another one. Let's go. Let's keep on moving here. We're going with YINN. This is the FTSE China Bull 3X.
YINN.
YINN.
Oh, okay, I got that.
So this is China
YINN.
for all the folks who are long China stocks.
Yeah, so the daily chart is hard to look at on anything that trades internationally out of regular market hours of the US equities, because it always gaps, right? So like you generally want to turn on the weekly chart on something that gaps like that to get a better idea of trend. And honestly, at this point, I'd probably throw on the monthly chart just to get a better idea of what this looks like. And yeah, you got a pretty distinct lower lows here. So lower lows highlighted by this green zone, lower highs shown by this red zone here. So overall, definitely something that could bounce. I mean, you do have an area that this has been an area where you've had bounces in the past, give or take, 5-10%, but it actually looks pretty decent if this previous low can hold here. Yeah, this actually doesn't look horrible.
So upside target would be somewhere up in the red range then, 26 or so?
I mean, this is a monthly chart, so that would definitely be like a long term. I think maybe like 6 to 12 month target over in the 20s, 25 area. But for now, you have your VWAP from this February high, which is right around 12 to 75, $13.
All right, right on. So a little bit of hope out there.
Little bit of hope.
On to the next one. We got Airbnb, ABNB. I know that this one's been really strong past couple of days.
Oh, has it? Yeah. Didn't they have earnings recently?
Yep.
Yeah. This is one that's kind of gone, had its own little party here. Yeah, this one still is in a position where just kind of like it looks like a heart rate, right? Or like a seismograph. You don't have a lot of direction. You've got a lot of up and down. So you do have an inside bar today. So if you turn on the daily chart, you can see here we did close inside yesterday's range. High and low are both also in yesterday's range. On the weekly chart, you definitely do have a stronger candle here. You've had pretty strong candles the last 3 weeks. If you turn on the monthly chart, you don't have a lot to go off of because we haven't been around that long publicly for ABNB. However, very strong monthly chart. I think this is an opening play. So Airbnb, Disney, casinos, airlines. I think all of these are going to do well in the next couple quarters, simply because I think, I'm not trying to be anything but realistic. It seems based on the numbers that COVID is starting to back off. I think we had a very big move to the upside with all those cases in January, and it kind of burned itself out. And I think you're seeing that the market is anticipating that to continue based on your Airbnbs, your airlines, your cruise lines, your oil, all going up because anticipated demand is starting to be priced into some of these names.
Right on. All right, let's keep on moving here. We're going to Arch, ARCH, Arch Resources. Oil, maybe? Mining?
Probably mining, if I had to take a wild guess. Yeah, I mean, this one looks pretty good. If you draw a simple horizontal level here, you do have a breakout of, multi-year breakout, very strong. If you look at the weekly chart here, you can see that we did pull back from our highs, which hit as high as 125, 124, 125. We're at 115 now. And this is honestly one of those things, especially for like metals and that type of thing, where I'd pull up seasonality. Now, let's see, this thing's only been around since 2016, but you are going into a month of March that has a 0% win rate since 2016. So this is something that is going into the weakest month of the year since this IPO'd, or whatever the case is. I guess it's something happened in 2016. If it IPO'd, I would assume so, unless it became definitely not a SPAC at $60. But yeah, 0% win rate for March. So you are going into a very weak time of the year. Maybe this is something to sell the rip, just based on seasonality. And what's interesting is if you have seasonality, you can play it both ways, right? If you have a 0% win rate for March, maybe you buy into the weakness, because going into April and May, you have very strong times of the year. with an 80% win rate, meaning that 80% of the time, April closes higher than March, and then 80% of the time, May closes higher than April's monthly close. So you can use seasonality and connect it with your technicals, and it can really give you a better view on the markets using a wider perspective rather than just using the charts or just using fundamentals or something like that.
If you were looking for a pullback on this one, where would you be focused?
At these previous highs here. So, you saw it in 2018, you saw it in 2019, and you saw it in October, which is right around 102, 103. So if this did pull back, I'd simply just look at this previous area here as a level to pull back to.
All right, cool. Got some targets for that one. Let's move on. GLBE, Global E Online.
Global E Online. Yeah, so this one is definitely newer. So you can't look at the weekly or the monthly charts too much. Anytime you have this type of a big correction to the upside, you always have to look at the overall trend. The overall trend still is lower lows and lower highs. So if you wanted to simply draw a flag formation here, you do have somewhat of a bear flag forming for now, until we really, what I'd say is, at risk of breaking down unless you get above, let's say 51, 52, which is just this previous area of support, which would now act as an area of resistance above. So until this thing gets above 51, 52, I think you're kind of in like this corrective phase with possibly lower moves to the downside.
All right.
So like if you were to draw, I'm not really into Elliott waves, but this is kind of a classic Elliott wave. 1, 2, 3, 4, and this could be your 5th wave to the downside.
Well, let's hope for
very rough sketch, but like I said, I don't use Elliott waves a ton, but this you do see a pretty easy to see waveform here forming up.
Definitely. All right, moving on. We got Prog, Prog, Progenity.
Oh, Prog. I was like, I'd be near there in a couple months. Going to Warsaw here in April. Yeah, Prog, not the city, the stock. Yeah, Prog. This is one that it's $1.64. I mean, I don't know the market cap. I can only imagine it's below 500 million. And if you simply look at price action, I mean, you guys are going to get tired of watching me draw the same setup here literally the whole night, but bear flag breakdowns, same exact thing here. Almost all stocks are doing it. And that's the thing is the broad markets are really making the markets at this point. So you're not going to find a ton of stocks that are up if the broad markets are down 1 to 3%. SPY down 1.5%, percentage 1.5%. Q's almost down 3%. You're not going to see a lot of stocks just ripping to the upside unless it's a dividend stock like MO. MO has been a really strong one. One of the few that has been relatively strong. But PROG, you've got this bear flag breakdown here. That's a little of aggressive circle. You can see here that we did break right below this support trend line. So if we were to continue down, this is where I definitely would draw a VWAP from this low, and that would be right around where we're at. So if we break down through that, we could retest this previous pivot around 142. And I'll just highlight that here in orange so you guys can see that. But yeah, this area here, I'll zoom in. So that would kind of be my target if we continue down. And, I'm going to draw a line that draw it here if I can draw it here. Well, you can draw it here, but look, there's only one data point on this line. If I draw it here, I've got literally 4 data points. 1, 2, going through this one, 3. So that's where I want to draw it. So like it's never going to be an exact area. That's why I come in after creating this area, and then I draw a zone to capture the rest of this price action that kind of interacts around that line of best fit is what I'm going to call it. So my zone would be 142 all the way to, let's say, 146.
Got it. All right, man, we got 5 minutes here, so we're gonna lightning round. We're gonna go fast.
5 minutes.
Next round, UPST.
Oh, decent one. I don't know what it did today. Wow, hit what, 160? Wow, I love it. Yeah, I mean, definitely not the strongest daily setup here. I mean, you do have some dark cloud cover, and simply that means that you're piercing this previous day's close. You close below pretty much 50% of this this candle, so definitely dark cloud cover is what you're going to essentially see this as a pattern. But if you turn on the weekly candle here, you'll definitely see that we have a pretty strong move to the upside. This did continue up. You got the VWAP from October right around, let's say 173, 175. And on the monthly chart, you don't have a lot of price action to look at, but definitely a solid monthly candle for now.
All right. Keep it on, my friend. Next round, DOCN, DigitalOcean.
DigitalOcean. Oh, sounds so provocative. Yeah, not great. You guys want to get really annoyed with me? We're going to draw the same thing that we've drawn the last 9 charts. Bear flag. I mean, literally everything's got this set up. This is a market that is clearly in sync, right? We had a bifurcated market before, meaning that you had one part of the market doing one thing, the other part of the market doing other, meaning you're going up on one side, down on other part. Most of these names, along with the broad markets, are all moving in the same direction now, which means that where I think we're getting momentum to the downside. DOCN, you've got your bear flag breakdown. If I were to take a wild guess where this goes, previous pivot here around 53. If 53 breaks, then I'd say, let's say around $50, $50, maybe 50 cents. Let's say $50 to $50.50 would be my target below.
All righty. Next one, TDOC, TDOC, Teledoc.
TDOC. Ooh, yeah. Not great. Not great. But you guys knew that after the last 9 charts we went over. Yeah. This thing's in pretty much a very strong down everything. If we were to draw anchored VWAP, your handoff on January of 2017, create another area here. Notice when we do this, the VWAP is way up here at 123. So the average participant that has participated since 2016, this low, is down, you know, a solid 40%. Whatever 128 minus 70 divided by that difference is. 128 minus 70 divided by 128, that's got to be close to 40% down. So the average participant who's bought this since 2016 is down about 35, 40% on this. That is pretty rough. And you can see here, if you kind of zoom in, you do have a little bit of a bearish pennant forming here on the weekly. If we turn this on the daily, you'll probably be able to see it better. Yep, exactly. And we're starting to break that here. So not so hot.
Not so
This
hot.
looks really similar to the last 19 ones we've gone over.
All right, we got one more, Jake. Yeah. We got one more.
One more.
We're gonna end this thing out with Mara, MARA, Marathon Digital. I believe this is a Bitcoin miner.
Yeah. I mean, if you want to trade Bitcoin and you don't want to actually own Bitcoin, this is a good proxy for it. You know, I mean, literally, you can draw the same exact setup here. You've got a bear flag forming, and this isn't going to be perfect, right? Like, you're not going to touch every single point perfectly, even though this one's pretty close. You have a bear flag, and at that point, you just have to. It's like getting a 18 on blackjack and saying, "Oh, well, hit me just because I want, just because I'm feeling, risky." This is a bear flag, and like that's what you're going to want to play because that's what it's showing you. Sure, if you want to go long on a bear flag, then go for it, but the odds are not in your favor, and that's kind of what I'm trying to get at here for a lot of these names, at least in the short term. And the thing is, as I mentioned, we do have the news-driven headlines. The market-driven that's essentially being driven by headlines and news articles that come out literally every 6 hours at this point. You'll see futures moving up and down all night. And then, like, oh, are down at 3 a.m. Then you look at 6 a.m. It's up, 0.5%. So this is such a volatile market. You're getting moves every news headline that comes out, and it's really hard to trade, against the trend at this point.
For sure, Jake, for sure. Well, man, how you feel? We just went through probably 15, 20 charts. That was awesome.
Yeah, no, it's more than I ever got through when we were doing the Thursday lives. And I think that's what people want to see. Everyone wants to see charts that they're looking at. And so maybe in the future we can look at some setups that look good. But I mean, the thing is, what does look good mean to you? Does look good mean that it's trending? Does it mean that it's long? I mean, you're just following trend. You can play the short side and the long side. So don't necessarily get caught in that. If the market is trending down, then maybe the best way to play that is through puts. The only thing is when the VIX is as high as it is, it's really hard to play puts, because if you play puts and this thing reverses, not only is the stock going up, just your puts, but the VIX is dropping, which is also double killing those puts. And the same reason with calls, right? It's really hard to buy calls. Even if the market did explode to the upside tomorrow, that means that the VIX is going to collapse, and that's going to really hurt the premiums on your contracts. I mean, yesterday, the S&P 500 closed green, but if you went on the options chains on the S&P 500, a lot of those contracts were red because you had by the dip in your right, you're going against the grain a lot of the time.
Jake, you dropped out a little bit, or you dropped out for a moment. Can you repeat what you just said?
Which part?
You were talking about how when if VIX were to collapse, it would mess with the option contracts.
Yeah, I mean, VIX is tough because the volatility index affects options pricing. So if you do buy puts and you're right, then you get a double right? The price is going towards your strike, going down, and the volatility index is going up. The implied volatility of contracts is increasing. So that's really good. But if you buy puts and the market goes up, not only does the market go up, but the implied volatility of your contracts goes down. So you're getting double whammy. So puts are great, but if you are on the wrong side of puts, you can really get hit hard if the market does, correct. Same reason for calls, right? Like if you're buying the dip when the market's down and the VIX is at 28 to 30 and the market rips tomorrow, your calls may not even be green depending on what they are. I mean, yesterday the S&P 500 closed green, but a lot of those calls on the options chain were red because you had the volatility index getting crushed. So it's a pretty tough market to trade. I mean, I'm not going to sit here and say this is easy breezy, but there are a lot of setups that have followed trend that we've seen in the last 16 plus charts.
Definitely. Well, Jake, man, thank you so much for being with us tonight. Thank you for sharing your knowledge. You provided us with so much great understanding of what's going on out there. So, on behalf of myself and the audience, I have to say thank you to you. And also thank you to the audience for being here with us tonight. It was a pleasure to do this. And we're going to definitely be doing more of these. Maybe Jake will join us again here in the near future for another one of these. And again, like I said earlier, if you've been sitting on the sidelines considering an account or thinking about getting an account with us, now's the perfect time. 50% off any account for the next about 12 hours or so, flash sale. So if you're sitting on the sidelines, now's the time to get on the field and start playing with the big guys. So thank you so much. Thank you so much again for being here, Jake. And thank you guys all for being here with us. And we'll see you next time.
All righty. Thank you guys, for having me on as a guest. And it's exciting to see you take over the role of host. And I know you'll do a great job. And I'm definitely hoping we can do this, once a month or something.
Let's definitely plan on it. I would love to do that for sure.
All right.
All right, guys. Well, y'all have a great rest of your evening. Jake, you have a good rest of your evening as well. And we'll catch y'all next time. Bye-bye.
See ya.